Hello and welcome back to the Junior Markets YouTube page. If you're tuning in from YouTube, make sure to check out our Junior Markets website. Some of the stuff I'll be going over today. Also, check us out on socials. I have all that linked in the website. We were kind of on a bit of a hiatus, a little bit of a break. I tore my labrum and college started, so it's been a little bit chaotic. So, for my one subscriber, I'm back now. And today, what we're going over is the stock of the day. So if you head on over to the website, head over to stock of the day, and you go on down, you can see that we have the Celsius holding doc, and I have it all in a Word doc. I kind of changed up the formatting. So today, that's what we're going to be going over. We're going to be going over a few of the different websites that we normally use and looking over some revenues, some sales, some other metrics, and the business to see if you think you should add this to your portfolio. Now, to start off, we're going to be over here on the Charles Schwab's website. This is my broker. And let's start off with what Celsius is if you're not already familiar with it. So, they develop, process, distribute, and sell energy drinks in the United States, Australia, New Zealand, Canada, Europe, and some other countries. Um, they offer Celsius, a fitness drink, and then it's designed to accelerate metabolism and burn body fat. So most people drink it when they're being active, at the gym, before they work out, stuff like that. So I have some mixed opinions on Celsius because there are some people that I know that love it and drink it all the time, and there are some people that I know that hate it. And it's always good to buy into a company that you see other people and yourself using and loving for the foreseeable future. So if you're someone that loves Celsius, this might be a good investment for you because you think they have a lot of growth. Now, they are down recently. If we look at this chart, they're down about 7%, almost $3. So this might be a good time to get in. And I'm going to show you a few reasons why now. So, first off, if we head down, this stock does not have a dividend, by the way. But if we head down, first, let's head into some earnings. So, some of the most important things to look at for growth companies is continuous growth. So, Celsius is a growth company. They're not established. Their market cap's about $9 billion. And so, for a company like this, we want to make sure earnings are growing, sales revenue is growing, revenues are growing, stuff like that. So, if we look at earnings per share, we can tell that this has been improving over time. And then if we scroll down into revenue sales, we can see that they had a bit of a dip off during COVID. But other than that, they've had some pretty nice growth since 2021. And then cash flow, they were a little bit negative these past few years. But then getting into 2023, we can see that they've started getting positive. And then if we look at this forecast, we can see for the third quarter 2024, which is about to happen now, we can see that the revenues are expected to increase 7.46%. Um, and then if we look at these growth rates here over 1 and 3 and 5 years, we can see some pretty astounding growth. So this company is growing their revenues, growing their cash flows, and they're becoming much more profitable over the past few years, and getting out of this little COVID slump where their stock price dropped off could be one of the best things for them. Because if we head back up here, we can look and see their all time high was about $94, $95. And that was a little bit ago, about a couple months ago, beginning of the year. And so they've had a bit of a drop off back to 2023 levels. So we do like to see this growth. That means that this company can continue to grow. Now, if we head down, we can head down into peer comparisons. So the peer comparisons that Schwab has chosen are Coke, Fizz, and a few others. And first off, let's head down into let's look at some margins. So if we look at return on assets and return on equity, Celsius is just kind of an outlier for return on equity. It's significantly higher than everyone else. The return on assets is about in line with everyone else, which is fine. Their price to earnings is 39, which is a bit high, and their forecasted price to earnings is 38, which means their earnings aren't projected to be much better than they are now. So that is something to keep a lookout for because we would love to see better earnings for a company like this that's not exactly very mature. Their price to sales is 6, which we would like to see that a little bit lower. Price to cash flow is 45, which is very high. So these 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 metrics are a little off because of it being a growth company, but we would like to see these improve in the future. And then if we get down on some of these growth metrics, sales growth over 1 year, 56%. That's amazing. We love that. 5 years, 90%. That's absolutely astounding. We love to see that. And then earnings per share growth 1 year, 258%. Yeah, but that's an insane number. And then obviously they don't have a dividend. And then if we go down and look into some of their margins, their operating margin is 22. Their gross profit margin is 50. It's kind of in line with all of their competitors. Their tangible book value per share, their enterprise value, it's all kind of in line with their competitors, which honestly isn't horrible. Their current ratio is 4, which is well above 1. So that's something that we do like to see, especially with a company like this. And even with their quick ratio, taking into account or not taking into account inventory. So that is something that we like to see. Now I'm over on Morningstar's website and I get a free subscription with KSU. So that means you guys, my one subscriber, also get a free subscription. And I'm here for one reason, just to see some of the growth, and well, I guess two reasons. The first is to see some of this growth over the past few years. It's been absolutely insane. Their gross profit margins are also good. Um, Heading down, their assets have been continuously improving. Their liabilities are improving. They don't have a lot of debt. And then if we get down into the cash from different operating and investing activities, we can see cash from operating activities was negative or very close to zero, and it's improved over the past few years. But getting down into the main reason I came here is, let's keep on scrolling down right here. So this is transactions from people inside the company or just major transactions for Celsius. And as you can see, there have been a few acquisitions. The acquisitions are a lot bigger than the dispositions. So that is something that we'd like to see. It means, and this company also has about 60% of its shares are held by the institution. So that means that this company has a lot of faith in itself to grow. All right, so now we're over on the downloadable Word doc that I put on my website under stock of the day. So I have some basic information up here. I have the description, I have a few graphs, but what we're going to go down to is the bottom for the price targets. So MarketBeat, which is a website that I love to use, and I go over some of the best websites to use in another YouTube video. You should go check that out. MarketBeat is one of them. They have a price target of $64, which is 68% upside. Morningstar's fair value is about 36 with a 1 star price, which means unlikely, but could happen, of $63. And then Refinitiv, which comes off of Charles Schwab's website, is a $62 fair value. So we get 2 buy and 1 hold ratings from these 3 different websites. And going back to what we talked about earlier with the opportunity, I kind of lay out some opportunities in here. But one of the biggest things that I think this company can do is continue to expand their worldwide market, their international markets, because they're doing all of this really in the US. They don't have a very big international presence. Um, so if they do continue to spread into countries like Europe and Asia, then this could be a very good opportunity to get into a stock that's pretty cheap and down, and has the potential to be a competitor or a very big competitor in the beverage industry. But that is another downside that I mentioned in the final thoughts, is that the beverage industry is very hard to break into. There are a few companies such as Coca Cola and Pepsi that just kind of dominate the market and buy buy out competitors, and it's very hard to get an established foot in the door. And so I think Celsius has got their foot in the door. I just would like to see them continue this growth and pretty much continue what they're doing now, just on a global scale. So that is it for this video, but I do have some final thoughts on Celsius that I would like to share. So first off, they are in a downtrend right now for the past month or two. And I've been listening to this podcast called Invest Talk. I should put it in the podcast if it's not already there. But it's these two guys and their portfolio managers. And one thing that they say is if a company is on a downtrend, play the downtrend. And this company is on a downtrend. So don't buy in a downtrend. Wait for a bottom out or wait for some opposite movement. Wait for it to start going back up consistently. So I would wait to buy this company until it either bottoms out or shows some more stability, because I think it has some more potential to keep going down, and then you could get in at a better price and then start your dollar cost averaging or just start your initial payments from there. But those are my final thoughts for Celsius. And thank you so much for watching. Make sure to check out Junior Markets on all of these pages: Instagram, TikTok, YouTube. And thank you so much for watching.